Do you want to avoid taxes when funding your business acquisition through your 401k? You can avoid the early withdrawal penalties by following this exact strategy we go over in today's video. Hi, my name is Zachary Jensen. I'm the managing partner here at TaxWise Financial Services, where we're empowering small business owners with tax saving strategies so they can build their wealth with confidence and grow more wealth quickly over time. In today's video, we're going to go over the ROBS, the rollover as business startups, what it is, how it actually works, and how to set it all up. So unlocking retirement funds to build wealth through business ownership is super exciting, but you have to do it right. So we're going to go over everything that you need to know in today's video. So just starting off here, for high earning professionals seeking to escape kind of the golden handcuffs of W-2 income or diversify their income through entrepreneurship, finding a business to buy is often the first major hurdle, and they've got various concerns, right? They want to fund it with an SBA loan, use a HELOC from their primary home, or cash savings. But a lesser known and IRS approved strategy exists known as the rollover as business startups or ROBS structure. And used correctly, the ROBS allows individuals to access their retirement funds tax and penalty free to acquire an operating business, which is fantastic. This guide I'm making here will explain exactly how ROBS works, what it actually is, and the actual IRS rules to avoid. So, and then we can contrast it with other options. So, what is ROBS exactly? So it's a legal strategy that allows you to roll over funds from a qualified retirement plan like your 401k or traditional IRA to invest in new or existing businesses without paying early withdrawal penalties or taxes. And this is done by forming a C corporation, establishing a new 401k plan for that C corporation, rolling over your retirement funds into the new 401k, and then using the new 401k to purchase stock in the C corporation. The net result is your retirement account becomes the shareholder of the business and the business receives operating capital. So super, super powerful. And then when it actually makes sense to use this, you definitely need to be high earning. So if you've got significant pre-tax balances in your 401k, like $100,000 plus, and if you're looking to buy an existing cash flowing business and you've already done it, but you don't want to take on more debt, you can take on some of that out of your 401k. Individuals who are leaving employment and want to convert their retirement savings into more active income, and then entrepreneurs who want to preserve personal liquidity or avoid using their home equity. So if they're really looking at that 401k as kind of the area they want to draw from, this is a great strategy. And it's especially attractive when SBA financing can be either delayed or denied, and interest rates make a lot of traditional financial products unattractive. Some downsides here: IRS is super strict about this, and violations can trigger retroactive taxes and penalties. You gotta be careful. Definitely have a CPA help you with this. You must be a C corporation, so you can't do the LLC or S corporation, which kind of is a downside for certain types of companies. There's complex setup and administration, which often requires a third-party plan administrator, which again can be a pain in the neck. And then there's ongoing costs and annual plan filings, like filing Form 550 and so on. Then the plan oversight. And then, of course, there's risk. If the business does not go well, you lose your retirement money that you put in. So, it's definitely more a risk on rather than something like an index fund. The IRS has scrutinized ROB structures through various tax court cases, but fortunately, those were upheld, and the IRS authority to disqualify these improperly managed plans, still is in effect. So thankfully that it passes tax court cases, but there are some tax court cases where they didn't do it properly, and then the IRS unfortunately disqualified it. So staying compliant here is critical. Here's how you actually do it. So number one, you're going to form that C corporation in the U.S., file incorporating documents with the state. Then you're going to establish that qualified 401k plan, and the plan needs to allow for rollover contributions and investing in employer stock. This is a customized plan. You can't use just a templatized plan out of something like Fidelity. You got to make it more customized. Then you're going to roll over your retirement plan funds. So you're going to contact your IRA or 401k custodian and execute a direct rollover to your new 401k. Then you're going to purchase C Corp stock through your plan. So your new 401k purchases stock in your C Corp in exchange for cash. That C Corp now has operating capital it can use, and the 401k owns shares. Then you're going to deploy the capital in the business. So use the funds to purchase a business, fund payroll, cover startup costs, etc. And make sure that you keep in documentation every single step of the way. File Form 550, maintain proper fiduciary standards with your 401k plan, and of course engage a third-party administrator to manage the plan compliance. So there are other funding methods like the SBA loan, HELOC, personal savings. However, this is great if you really just got a big old 401k, and like for most folks that have been working along W-2 but have been diligently contributing to their 401k for 10, 20 years. They've got a big 401k and all their assets are kind of tied up there, but they want to get into business ownership now. This is a really great way to unlock those savings, deploy them in an asset you control, and overall get higher returns. Used correctly, Robs gives you control over your retirement assets and allows you to invest in your own earning potential. And if the business succeeds, the value of your 401k stock grows tax deferred, so you don't actually have to worry about, if you go and sell the company, paying taxes on that, because now the 401k owns that. So really, really strong and powerful strategy that offers a legally compliant way to avoid paying early withdrawal and capital gains. So Robs isn't for everyone, but for high earners with strong retirement balances and a clear business acquisition target, it can be a game-changing tool and very, very powerful. Obviously, work with an experienced advisor if you need someone to walk you through this and help you with it. Our contact information is in the description below. We'd love to help you out, and I hope you found this video valuable. Thanks so much for watching, and have a great day.